Welcome to Global Market Pulse, where we dive deep into the latest developments in the financial world, bringing you insights, analysis, and predictions to help you navigate the ever-changing global markets. Today, we're focusing on one of the most critical weeks leading up to the Federal Reserve's September meeting. This week, all eyes are on the Federal Reserve and key economic reports that could give us clues about the Fed's next move. From speeches by top Fed officials to crucial economic data releases, the market is hungry for information that could influence the upcoming rate decision on September 18th. But what exactly should we be looking at? Let's break it down. Starting on Monday, August 19th, we have Fed Governor Christopher Waller giving welcoming remarks, followed by the release of the U.S. leading economic indicators for July. This report is particularly important as it provides a composite view of future economic activity. With a decline of 0.4% in July, down from a previous increase of 0.2%, it suggests that we might be seeing some softening in the economy. Tuesday, August 20th, brings us speeches from two significant Fed figures: Atlanta Fed President Raphael Bostic and Fed Vice Chair for Supervision Michael Barr. These speeches can offer valuable insights into regional economic conditions and the broader regulatory landscape. Then, on Wednesday, August 21st, the minutes from the Fed's July FOMC meeting will be released. This is a must-watch event as it will give us detailed insights into the Fed's internal discussions, potentially revealing their thought process on interest rates, inflation, and the overall economic outlook. Thursday, August 22nd, is packed with important data. We'll see the initial jobless claims report, which came in at 230,000 last week, just a bit higher than the previous 227,000. This is a leading indicator of labor market strength. Alongside this, we'll also get the S&P Flash U.S. Services and Manufacturing PMI reports. The services sector remains in expansion with a previous PMI of 55.0, but manufacturing is teetering at 49.6, signaling contraction. This divergence is something to keep a close eye on. Later that morning, we'll have existing home sales data for July. Forecasts are predicting a slight increase to 3.95 million, up from 3.89 million in June. This data will provide us with a snapshot of the housing market's health, a key driver of economic growth. Friday, August 23rd, marks the climax of the week with Fed Chair Jerome Powell's speech at the Jackson Hole retreat. Historically, this speech has been a significant event where Powell might provide critical insights into the Fed's views on the economy and potential monetary policy shifts. The market will be on edge, parsing every word for hints about a possible rate cut in September. Also on Friday, we have new home sales data for July. The forecast is for $625,000, a slight increase from $617,000 in June. The housing market has been a strong point in the economy, and this data will be important for confirming that trend. Now, let's circle back to the big question on everyone's mind. Will the Fed cut rates by 25 or 50 basis points in September, or will they hold steady? The decision will likely depend on the data we get this week and Powell's tone at Jackson Hole. Historically, a 25 basis point cut is seen as a signal that the Fed is making a precautionary move to sustain economic growth. However, if the data this week indicates significant economic weakness, or if Powell sounds particularly dovish, a 50 basis point cut could be on the table. But we need to be cautious. If the market perceives the Fed as overly reactive, it could signal that the economy is weaker than expected, which might spook investors. The implications of a rate cut are profound. For the economy, it means cheaper borrowing costs, which can stimulate investment and spending. But for the stock market, the reaction is more complex. A rate cut might initially boost stock prices as lower rates generally support higher valuations. However, if the cut is seen as a response to worsening economic conditions, the the market could interpret it negatively. And let's not forget about Bitcoin and other cryptocurrencies. These digital assets often react to shifts in monetary policy, particularly as rate cuts can weaken the dollar, potentially driving up demand for alternative assets. As we head into this pivotal week, the market will be closely watching every piece of data and every word from Fed officials. While it's impossible to predict exactly what the Fed will do in September, this week will provide crucial clues. My advice? Stay informed, stay flexible, and be ready to adapt your strategies based on the incoming data.